Hi students, in the previous session we discussed about capital market under the unit financial markets 1. In this previous chapter we discussed about what is the meaning of capital market and definition of capital market. Then what are the types are available in the capital markets. Then characteristics of capital market. We also discussed about the characteristics of capital market, that is security market. The capital market act as a securities market, price, participants, location and market for financial assets. These are the characteristics of capital market has been discussed. Then different kinds of capital markets. Different kinds of capital market also discussed. One is primary market, another one is secondary market. Primary means it's a new one, secondary means it's a second one or already existing companies sold it. Then we finally discussed about functions and importance of the capital market, because capital market is have a very crucial and significant function and role in the market. Under this topic we discussed the significance of the capital market, how it helps to the development of the economy. One is savings and capital formation, then permanent capital, then how the capital market helps to industrial growth. Then we discussed about ready and continuous market, how the capital market is act as a ready one and continuous one also. Then the capital market function as a reliable guide to the performance. Then proper channelization of funds, how to allocate the funds properly, which channel is very useful and proper channel to mobilize and channelize the funds is helpful in the capital market, also discussed. Then provision of variety of services, what are the variety of services available in the capital market. Provision of variety of services also discussed. Then development of backward areas, how to develop a backward area or a rural area with the help of capital market, also discussed. Then foreign capital, how to earn foreign capitals, this is also discussed under the functions of the capital market. Then finally easy liquidity, how quickly you change a asset or a source into cash, it is called liquidity. In this capital market it is main function is easy liquidity, it very useful to change the sources in very liquidity form very quickly. Now in this session we will discuss about the Indian capital market and now we see about Indian capital market evolution and its growth. The period between 1947 and 1973 marked the development of infrastructure for capital market. The period between 1947 to 73 is very useful infrastructure. It created very useful infrastructure in the company in the capital market. During this period, a network of development financial institutions such as IFCI, ICICI, IDBI, these are the name of some financial institutions like banks, and UTI, SFCs and SIDCs were established under these periods. These financial institutions strengthened the capital market. It means the IFCI, ICICI, IDBI, UTI, SFC, SIDCs, these are established under the evaluation of capital market. From that evaluation, the financial institutions very change as a very strengthened one in the capital market. Then during the period between 1980 and 1992, debenture emerged as a powerful instrument of resource mobilization in the primary market. It means Between the 1980s and 1992, debentures. Debenture means it's also like a shares or bonds, also called same as debentures. It's emerged as a powerful instrument in the market. It is very useful to resource mobilization in the primary market. The public sector bonds were introduced in that period. A number of stock exchanges came into existence. There was a momentous growth in the secondary market. With the help of stocks exchange, the secondary market is very momentous growth in the secondary market. SEBI emerged as an effective regulatory body for the primary and secondary markets and afford a measure of protection to small investors. Next one is SEBI. SEBI means Securities Exchange Board of India. SEBI's abbreviation is Securities Exchange Board of India, emerged as an effective regulatory body for the primary and also the secondary markets. We will discuss about SEBI in detail in the coming chapters. New financial services such as credit rating was introduced. In this, under the SEBI, the new financial services also like credit rating also introduced. Then the number of committees were constituted in order to suggest measures to revamp and restructure the working of the secondary market and cause buoyancy in the primary market. For the cause buoyancy and restructure and revamp the institutions, there are many committees were created under the capital markets evaluation period. Then there are some of these committees were given: committees on organization and management of stock exchange, working group on the development of the capital market, a study group for guidelines relating to valuation and new instruments, a high powered study group on establishment of new stock exchange, a committee on trading in public sector bonds and units of mutual funds. These all are the committees created under the period of evaluation of the capital market for the revamp and restructure the working of the secondary and primary market also. Next, we will see about new financial institutions. A number of institutions of finance have been established to cater to the credit requirements of various segments of industry and needs. A brief outline of these institutions is presented below. Here they told about number of new financial institutions. The institutions established to cater the credit requirements of the various segments of industries and their needs also. We will discuss in the below. First one is venture fund institutions. Venture fund institutions. Venture capital financing is a form of equity financing designed especially for funding new and innovative project ideas. Venture capital funds bring into force the high technology projects which are converted into commercial production. It means it helpful it useful to the technology is using that high full technology is converted into a commercial production. Many specialized financial institutions have promoted their own venture capital funds. They include Risk Capital Foundation of IFCI, Venture Fund of IDBI, SIDBI, Technology Development and Infrastructure Corporation of India. It means it's shortly called as TDICI and others. Next one is mutual funds. All of you heard about the word mutual funds in the advertisements. Here the mutual fund is very important in the capital market. Financial institutions that provide facilities for channeling savings of small investors into avenues of productive investments are called mutual funds. Mutual funds means it provides a facilities for channeling savings of small investors into avenue of productive investments. It's called mutual funds. A mutual fund company invests the funds pooled from shareholders and gives them the benefit of diversified investment portfolio and a reasonable return. Specialized financial institutions like LIC, UTI, etc. Besides, commercial banks such as SBI and Canara Bank all are carrying out the business of mutual funds. The benefits of mutual fund are high return, easy liquidity, safety and tax benefits to the investors. Then factoring institutions. Factoring is an arrangement whereby a financial institution provides financial accommodation on the basis of assignment, sales of account receivables. The factoring institutions collect the book debts for and on behalf of its clients. Some of the factoring institutions operating in India are SBI, Factors and Commercial Services Private Limited, a subsidiary of State Bank of India, and Canara Bank Factors Limited, a subsidiary of Canara Bank. These are the factoring institutions. Then over the Counter Exchange of India, simply called as OTCEI. The OTCEI was set up by a premier financial institution to allow the trading of securities across the electronic counters throughout the country. The OTCEI was set up as financial institution for what means it is a trading securities across the electronic counters throughout the country. It addresses some specific problems of both investors and medium-sized companies. Some of the greatest strengths of OTCEI are transparency of transactions, quick deals, faster settlements and better liquidity. This is the work of the OTCEI. Then National Stock Exchange of India Limited, simply abbreviated as NSEI, National Stock Exchange of India Limited. The NSEI was established in 1992 to function as a model stock exchange. The exchange aims at providing the advantage of nationwide electronic screen based scribbleless and floorless trading system in securities. The institution is expected to allow for an efficient and transparent system of securities trading. The NSEI helpful to very efficient and transparent system for the securities trading. Then National Clearance and Depository System, simply called as NCDS, National Clearance and Depository System. Under the scriptless trading system, settlement of transactions relating to securities takes place through a book entry. The entire scriptless trading system comprises the following three segments. First one is National Trade Comparison and Reporting System, which prescribes the terms and conditions of contract for the securities market. Then National Clearing System, which aims at determining the net cash and stock liability of each broker on a settlement date. Then National Depository System, which arranges to provide for the transfer of ownership of securities in exchange on payment by book entry on electronic ledgers without any physical movement of transfer deed. Then National Securities Depositories Limited, the NSDL. The NSDL was set up in the year 1996 for achieving a time-bound dematerialization as well as rematerialization of shares. It means dematerialization and also rematerialization of the shares. The establishment of NSDL is expected to alleviate the problems of post-trade transactions in the secondary market. Then Stock Holding Corporation of India Limited, SHCIL, Stock Holding Corporation of India Limited. Stock Holding Corporation of India Limited aims at serving as a central securities depository in respect of transactions on stock exchanges. The corporation also takes up the administration of clearing functions at a national level. Then foreign exchange market. Foreign exchange market abets the foreign exchange trading. It is the largest, most liquid market in the world with an average trade value more than $5 trillion per day. $5 American dollars trillion per day. It includes all of the currencies in the world, and any individual, company or country can participate in it. Foreign exchange market means our currency is transfer into another country's currency. Here it is the largest, most liquid market in the world. Averagely the value is $5 American dollars trillion per day. Transaction is exchanged in the exchange market. It includes currencies in the world, and individuals, company or country can participate in it. Another topic is commodity market. The commodity market manages the trading in primary products, which takes place in about 50 major commodity markets, where financial transactions increasingly outstrip physical purchases which are to be delivered. Commodities are commonly classified into subgroups. Here we discussed about commodity market. Commodity market manages the trading in primary products, particularly 50 major commodity markets only. Under this, there are two subgroups. One is hard commodities market, another one is soft commodities market. Hard commodities means hard commodities are raw materials typically mined, such as gold, oil, rubber, iron and ore. These are called hard materials, hard commodities, because it takes more times also, and also takes from the hard places. So it is called hard commodities. Example like mines, gold, oil, rubber, iron and ore, like petrol and diesel also. Then soft commodities. Soft commodities are typically grown agricultural primary products such as wheat, cotton, coffee and sugar. Here soft commodities means grown agricultural primary. It is depends upon the agriculture department. It is primary agricultural products such as wheat, cotton, coffee and sugar. Then finally derivatives market. Finally derivative markets. Derivative markets facilitates the trading in financial instruments such as futures, contracts and options used to help control financial risk. The instruments derive their value mostly from the value of an underlying asset that can come in many forms like stocks, bonds, commodities, currencies or mortgages. Students, we discussed about the 5th chapter, capital market. In this chapter we discussed about what is the meaning of capital market and the definition of capital market, and what are the characteristics of the capital market and the types of capital market. There are mainly two kinds of capital market comes under the category. One is primary market, another one is secondary market. Then we discussed about the primary market and the three ways of the primary market companies to raise the capital in the primary market: public issue, rights issue and private placement. Then we discussed about the meaning of secondary market. It is a market for the old securities, in the sense of the securities previously issued in the primary market or traded. It is called secondary market. Then we discussed about the functions and importance of capital market, how to helpful to earn savings and how to formulate the capital. Then function as a permanent capital. In the capital market, helpful to create a permanent capital. Then how the capital market helpful to the industrial development or the industrial growth. Then it acts as a ready and continuous market. Then the capital market acts as a reliable guide to the performance, also discussed. Then the proper channelization of funds, how the funds are properly channelized in the different ways, as correctly discussed. Provision of variety of services, also discussed. Development of backward areas, how to develop a backward or a rural areas with the help of capital market, also discussed. Then how to earn the possible foreign capital and how to generate the foreign capital was also discussed. Then how to the capital market, how helpful to change a asset into very liquid one. It means easy liquidity. also discussed. Then we discussed about Indian capital market and how the evolution and growth of the Indian capital market evolution and growth comes under the different periods between the 1947 and 1973. And that period, the network development of institutions are created like IFCI, ICICI, IDBI and UTI, SFCs, SIDCs were established, and also it helpful to strengthen the financial institutions in the capital market. Then during the period between 1980 and 1992, the debentures is emerged as a very powerful instrument. This was also discussed in this chapter under the title. Then SEBI, Stock Exchange Board of India, also discussed very clearly about SEBI in the coming chapter. Then we see number of committees were created to develop the different institutions in the markets and the revamp and restructure the working secondary market. These committees are, some of the committees are management of Committee on Organization and Management of Stock Exchange, Working Group of the Development of the Capital Market, a study group for guidelines relating to valuation and new instruments, etc. also discussed. Then new financial institutions, that is venture fund institutions. Then mutual funds, what is the meaning of mutual funds also discussed. Then factoring institutions. Then over the counter exchange of India, OTCI. National Stock Exchange of India Limited, NSEI, also discussed. How to provide the advantages nationwide to scripless and floorless in the trading with the help of electronic method. The National Clearance and Depository System, NCDS, arranges provide for the transfer of ownership of securities in a book entry method, also discussed. The National Securities Depositories Limited, NSDL, was set up in the year 1996, also discussed. Then foreign exchange market, how the foreign exchange market helpful in our country, also discussed. Then commodity market, there are mainly two commodities also discussed. One is hard commodities such as gold, oil, rubber, iron ore, and soft commodities like agricultural products such as wheat, cotton, coffee and sugar. Then derivatives market, what is the meaning of derivatives market also discussed, is a financial instrument such as futures, contracts and options used to help control financial risks. Students, now we discussed about short answer questions in the book bag. First question, what is capital market? Answer, capital market is a market where buyers and sellers engage in trade of financial securities like bonds and stocks. The buying or selling is undertaken by participants such as individuals and institutions. Second question, write a note on OTCEI. Write a note on OTCEI. The answer is, the OTCEI was set up by a premier financial institution to allow the trading of securities across the electronic counters throughout the country. It addresses some specific problems of both investors and medium-sized companies. Some of the greatest strengths of OTCEI are transparency of transactions, quick deals, faster settlements and better liquidity. What is mutual fund? What is mutual fund? The answer is, financial institutions that provide facilities for channeling savings of small investors into avenues of productive investments are called mutual funds. Next question, who are the participants of capital market? Who are the participants of capital market? There are many players in the capital market. The participants of the capital market includes individuals, corporate sectors, government banks and other financial institutions. Next, how is the price determined in a capital market? The price of the securities is determined based on the demand and supply prevailing in the capital market for securities. Students, now we discussed about short answer questions. First one is, what are the various kinds of capital market? Explain. The answer is, The capital market is divided into two, that is primary market and secondary market. Primary market is a market for new issues or new financial claims. Hence it is called as new issue market. The primary market deals with those securities which are issued to the public for the first time. In the primary market, borrowers exchange new financial securities for long-term funds. Thus, primary market facilitate capital formations. Secondary market may be defined as the market for old securities, in the sense that securities which are previously issued in the primary market are traded here. The trading takes place between investors who follow the original issue in the primary market. It covers both stock exchange and over-the-counter market. Okay, next question. Explain any two functions of capital market. First one, savings and capital formation. In capital market, various types of securities help to mobilize savings from various sectors of population, individuals, corporate, government, etc. The twin feature of reasonable return and liquidity in stock exchange are definite incentives to the people to invest in securities. This accelerates the capital formation in the country. Then permanent capital. The existence of a capital market or stock exchange enables companies to raise permanent capital. The investors cannot commit their funds for a permanent period, but companies require funds permanently. The stock exchange resolves this rate of interest by offering an opportunity to investors to buy or sell their securities, while permanent capital with the company remains unaffected. Okay, students, today we discussed about capital market. In the coming session, we will discuss about money market. It is also related to this unit, financial market. We will discuss about the money market in the coming sessions very detailedly in the coming sessions. Thank you.